The Bitcoin supply shock will send Bitcoin price up to $120,000 according to Standard Chartered Bank. Bitcoin miners will hoard BTC and drive up prices in the process, with BTC price due to tap $50,000 this year as a result. I love it. I love it. Massive mega banks out here shilling Bitcoin for us. About time, guys. Get on with the party here. Of course, we've had some big banks that have been interested in Bitcoin for a while. And, banks getting into Bitcoin, it's a bit awkward. A little bit awkward, right? These guys are not why we have Bitcoin, right? We have Bitcoin because we don't trust the banks. But the banks are getting involved anyway because they, like everyone else, have an equal opportunity to come and buy Bitcoin and to make fun price predictions on Bitcoin. $120,000 Bitcoin. That's not so crazy of a prediction, to be honest. So they're saying $50,000 this year. Maybe. I've been targeting 48K. That's my personal prediction for 2023. We'll see how that plays out. 120K next year. It's an interesting price target. I think it's rooted in reality. We shall see. Now, a lot of people have been calling for 150K, 180K. It's a tough one, because you get wedded to an idea. And this happened to me in the previous bull run. We have to do this, right? So we had to get to 100K. I was convinced we're going to go to 100K. Didn't happen, obviously. Yeah. Anyway, will that same thing happen in the next bull cycle where maybe these more conservative estimates should be paid attention to versus the more optimistic estimates that are saying, hey, we're going up to 150K, we're going to 180K, we're going to 250K, 300K. I've seen some big numbers being thrown around for the next cycle in 2024, 2025. So we'll see what comes up with this. Let me know in the comments where you think the price is going to top out at in the next cycle. Be very curious to hear your opinion on that. Also very interesting, also from Standard Chartered Bank, Bitcoin Magazine points out, December 2022, not that long ago, $800 billion bank Standard Chartered predicts Bitcoin will crash to $5,000. Well, we got down to $16,000, so that's pretty low, but it ain't no 5K, is it? No. Then just a few months later, July, fast forward 7 months, and Standard Chartered Bank flipping around and saying, hey guys, let's do 120K now. We changed our minds. Now, fair enough. Look, December 2022, we were all feeling pretty damn bearish. We were all feeling, pretty rough, I think, about the markets at that time. FTX just collapsed. Sentiment was absolutely just in the gutter. It was rough. But the narrative is changing, as they point out here at Bitcoin Magazine. We also see some others throwing their hat in the ring. Matrix Ports year-end 2024 prediction for Bitcoin. Bitcoin can reach $125,000. A strong performance that fuels bullish sentiment. Sure, 125K. Yeah. Hey, what's the difference of a few $1,000s between friends here, right? We shall see again where it all ends up. We're seeing a lot of big price predictions starting to come out as the market flips more bullish as we start entering this period of cautious optimism in the market where people are saying, hey, yeah, I know it's been pretty rough for a while, but maybe things are not going to be that bad. Maybe things are going to go okay. Maybe we're all going to make it, right? We will end up being all right in this cycle. So we'll see where we end up. Definitely interesting to see all these big predictions coming out. Of course, now that we had BlackRock and all these other players trying to get their Bitcoin ETFs again, that is the fuel that sends Bitcoin up to 6 figures, right? So that's where the money is going to come from to get us pumping up like that. This chart here from Stock Money Lizards, time to a new all-time high is running. Looking back at the previous all-time high for Bitcoin and how long it takes until that new all-time high comes in, right? So in this situation, we've had previously 616 days for the first cycle, 191 days for the second cycle. So that was 2014 forward to get a new all-time high, right, from the previous all-time high. And if we take from the 2017 all-time high up till we got our new high prices, right, we broke the previous all-time high in 2020. That was 1,065 days. Now, if we were to say, well, it's going to be 1,065 days to the next one, that brings us into late 2020. For maybe early 2025 somewhere. So we'll see how that goes. And that's not to say the new cycle high, right? That's just to say we're breaking the previous all-time high post Bitcoin halving in this situation. And then we'll probably find our new all-time high shortly thereafter. As you can see, this tends to be the case with Bitcoin, where in the first cycle, look, we passed over the previous all-time high, and then within a few months, we hit the new peak price. Same in 2017. We passed over the previous all-time high, then we hit a new peak price within a few months after that. Same in 2020. We hit our new all-time high, right? We passed over the previous peak and we hit a new peak price within a few months. Although then we did have that big correction in 2021, and eventually we got up to like 69K in late 2021. So it was about a year later after we initially broke that. But that was a bit of an anomaly, I think, really just based on the fuel of the hype around El Salvador making Bitcoin into legal tender. So we'll see how it plays out next time. But interesting food for thought. Another chart here from the guys over at Glassnode. Bitcoin holders remain in a regime of accumulation, continuing to absorb coins at a rate of 27,000 per month. Interesting. So many different charts, and they basically all say around the same thing, is that a massive accumulation is happening right now from small accounts to big accounts and right on through, right? We are seeing holders and accumulators accumulating, which is, of course, very bullish, I think, for the long-term picture, because this is some intense accumulation happening during a bear market scenario, right? Or you can say we've started the new bull market, which I think we're in that situation. But the new bull market, this is the time when people are still not really feeling like things have changed. We're still a lot of pessimism. People are still down massively on their portfolios, those who have held and didn't capitulate at some point. So that mega bullish sentiment really hasn't come back into the market yet. However, people are still showing up and buying Bitcoin despite all the crazy, right, that's going on. People are still showing up and buying BTC, and I love that. Next one here, this is supply in profit and supply in loss. So as they point out here, Bitcoin prices have reached the 30K midpoint of the 21-22 cycle, with several metrics approaching levels associated with a reaccumulation period seen in past cycles. Inscriptions are cooling off. That's the sort of Bitcoin NFT thing that we had going on. And monetary transactions are picking up steam once again. So we're seeing the kind of indicators that are saying, well, we're now actually in a reaccumulation period. Again, a lot of indicators showing that that is the period of the market that we're in. We've exited the worst of the bearish trends, and we are in a reaccumulation period. Now, I'd like to point out that so much of this can be undone by a massive U.S. recession, a brutal U.S. recession, right? And we're going to talk, more about the idea of a recession. However, if we get a really bad economic situation playing out at the end of the year for the USA, that could really derail equity markets, which would derail crypto markets, most likely. Well, remains to be seen exactly how it all plays out, of course. And we may get that soft landing still for the U.S. economy. So we'll see how that plays out. Next one here for you, Bitcoin bear market rally performance. So Bitcoin prices have reached the 30K midpoint of the 21-22 cycle. Several metrics, again, approaching that level of a reaccumulation period. So we can see here once again, that we are in that bear market recovery situation. It's a very, very similar pattern that we're seeing right now to what we saw in 2015, to what we saw in 2019, to what we saw in 2020. So it's very interesting to see these on-chain indicators looking very similar to how we've seen them look before previous news cycles take off. Fascinating, right? Before we get into a few more charts here, if you are a trader, do get yourself an account over on BYBIT. It is the best place for trading futures. Also, great spot altcoin markets, super popular copy trading service as well. So if you are a trader, use the link down below in the description to check that out. And you'll also be eligible for up to $30,000 in deposit and trading bonuses. So go and get amongst it if you are a trader. Now, the next chart from Glassnode I want to talk about with you here is that there's around 592,000 Bitcoin with a purchasing price of $30,200, which is kind of around the current spot prices. Now, that suggests small price fluctuations in either direction will send 3.45% of the circulating supply into a position of profit or loss, respectively. Now, what's interesting is we've seen these massive, massive accumulations of Bitcoin right around the 30K mark. The next big accumulation zone down was at the 26.8K mark, which is why 26K was such an important level. And of course, down at 16.5K, which basically was the bottom, right? Right around the bottom. That was 637,000 Bitcoin accumulated in that zone. So we have these massive, massive price points around these massive areas of price support. And so these are really important to point out because those areas for Bitcoin then represent very strong lines where the people who bought there, some of them might want to just get out and get their money back and say, hey, I bought $30,000 a year ago and it went down and it's back up. I'm going to sell your money out and get out of this thing, right? But on-chain data doesn't necessarily suggest that that's going to be the case. What is more likely is that the people who bought at 30K are likely to be holding around 30K and hoping for higher prices, especially now that we have the Bitcoin ETFs and all this kind of stuff in the works. Selling your Bitcoin that you've been holding on to for a year, maybe that you bought at 30K last year, you're still holding on to, looking at everything that's forming up right now, not necessarily the most logical decision, we would say. Also interesting to see how much Bitcoin has been exiting exchanges. So this chart right here, this is from Coinbase. This is the balance on Coinbase in particular. We can see that in March 2020, Coinbase had about 1 million BTC. That has now dropped to about 440,000 Bitcoin. And you got to remember, Coinbase is the organization that all these big financial institutions like BlackRock and Fidelity and Invesco are going to be working with for their Bitcoin ETF products. So we've seen massive amounts of Bitcoin being bought and taken off exchanges. And you have to remember, Coinbase is basically the go-to Bitcoin provider for major US financial institutions. Yeah, I know these new players are showing up, but all these other big financial institutions, they've got, I think Coinbase came out and said that at one point they have almost half of the top 100 financial institutions that have accounts with them. Those people have been buying Bitcoin. Those organizations have been buying Bitcoin. Very, very interesting, right? We also see on-chain data showing us here that we have 1,007,329 addresses. That was yesterday. There's probably a few more today that hold 1 Bitcoin or more. This has been incredible accumulation. We've seen this number rise by almost 200,000 addresses in the last year. During the bear market, a lot of people looked at Bitcoin and said, now's the time to buy. Now's the time to buy. And they have been buying. They've been putting their money where their mouth is. And in spite of all the fear and all the crazy and the collapses and the lawsuits and the crackdowns and all that stuff, people showed up and bought Bitcoin. And I love to see it. You love to see it too. It's absolutely awesome. One thing to keep an eye out moving in the end of the year that could cause some turbulence in the markets, especially for Bitcoin very specifically. This may not affect altcoin markets as much. However, what Bitcoin does tend to affect the rest of the markets. Now, this is about Mt. Gox and their Bitcoin. So we are going to see Bitcoin coming out to Mt. Gox debtors in the not so distant future. So Mt. Gox's latest update, the base repayment, intermediate repayment, and early lump sum repayment are currently scheduled to be made by October 31st, 2023. Deadlines may be extended with the permission of the Tokyo District Court. So we knew a lot of this already, but just a reminder that there's these big sales that still can come into play, that there's these big liquidity events, if you will, that can still affect the Bitcoin market very, very specifically. And so it depends on how we see things play out. If we have sort of boring markets, low exchange volume, and we start seeing all the Mt. Gox Bitcoin getting dumped, just the event alone could cause a bit of fear, to be honest. And the amount of Bitcoin, honestly, these days, it is a lot of Bitcoin, but at the same time, the market's big enough and mature enough that it can't absorb that hit. But the fear alone might freak people out a little bit that the Mt. Gox Bitcoin is coming. Let's all panic. That's probably going to be worse than the bite, right? The bark of Mt. Gox could be worse than the bite of Mt. Gox. So we'll see how that plays out. But that's something to keep an eye on for later in the year. But it'll be interesting to see if we, for example, see the Bitcoin ETFs getting approved around the same time. Does that balance it out? Or is it just such a bullish event that all this Bitcoin being released from Mt. Gox doesn't even matter anymore? And I liked this meme. It's the mid-curve meme, right? It's a very powerful meme. And there's always something going on in the markets. There's always some crazy, whether it's good or bad or whatever it might be. But generally, if you want to make money in the markets, you do have to take risks. And everything's a risk. Even holding cash is a risk for a variety of different reasons. But a lot of people, they want to wait for the perfect time. A lot of people want to wait for everybody to say, well, it's a safe time to invest now. Now's the time. See, the media is talking about it, your uncle's talking about it, and that's, of course, usually the most dangerous time to invest. If you want to make money in markets, you got to take the risks. You got to take the risks. There's really no ifs, ands, or buts about it, right? On the far end of the spectrum is the risk takers who take risk because they're just crazies. They're degenerate gamblers. They're apes, whatever you want to call it, right? And then on the other end of the spectrum, you have the gigabrains, right? The Chads who are just saying, I should take more risks because I understand the risks and I know that. And the mid curve, that's where you get stuck on the sidelines in cash, going, oh, I should wait for a perfect time. Now's not the best time, whatever. I could have bought then, so I'm going to wait for a better price. Price will go back to all these things, right? Instead of just accumulating. I've been trying to keep it simple with my approach to Bitcoin for the last couple years, to be honest, but certainly during the bear market, just steadily accumulating every week. And it's been paying off pretty good so far, at least. Also, you need to keep it in mind with the markets that it's not easy. A lot of people think it's easy. And in a bull market, when every coin's going up 100% a week, well, we feel like it's easy, right? But it's not easy. Markets are hard, right? The expectation, things are just going to go up forever and it'll be great. The reality is that you're going to have a much harder road of lonely stacking and going against the herd if you really want to make money, taking risks and all these kind of things. So something to keep in mind.